Asian markets opened the week on a mixed but largely positive note as investors assessed the latest developments in the ongoing conflict involving the United States, Israel, and Iran. Stocks in Japan and South Korea moved higher on Monday, while many other markets across Asia remained closed due to public holidays. Investors closely monitored geopolitical tensions following new statements from US President Donald Trump regarding Iran and the Strait of Hormuz. Japan's Nikkei 225 index rose 0.62%, while the broader Topix index gained 0.23%. In South Korea, the benchmark Kospi advanced 1.8% and the small-cap Kosdaq climbed 0.98%. Several markets across the region were shut for holidays. Australia, New Zealand, and Hong Kong observed Easter, while mainland China and Taiwan marked the Qingming Festival, also known as the Tomb Sweeping holiday. Market sentiment was shaped largely by developments in the Middle East over the weekend. President Donald Trump issued a new round of threats against Iran, warning that the United States could attack Iranian power plants and civilian infrastructure beginning Tuesday if Tehran failed to fully reopen the Strait of Hormuz. The Strait of Hormuz, located between Iran and the Arabian Peninsula, is considered a critical global oil choke point. Before the war between the United States, Israel, and Iran began on February 28, the waterway handled about 1/5 of the world's oil supplies. In a social media post containing expletives, Trump warned that Iran would face severe consequences, vowing to bring what he described as hell to the country. The remarks followed the rescue of an American airman inside Iran by US forces last week. Trump later clarified the deadline in another post, stating Tuesday 8 p.m. Eastern Time as the cutoff, without further explanation. The White House subsequently confirmed to MS Now that the specified time represents the new deadline for Iran to reach a deal with the United States. The US president also announced plans to hold a press conference with the military at the Oval Office at 1 p.m. on Monday. Iran rejected Trump's ultimatum, stating that the Strait of Hormuz would only reopen fully after compensation is provided for damage caused during the war. Tehran has continued strikes targeting economic and infrastructure sites across the Gulf region. Among the reported targets was Kuwait's oil headquarters. Energy markets reacted strongly to the ongoing conflict and uncertainty surrounding global supply routes. Oil prices rose despite an announcement by members of the Organization of the Petroleum Exporting Countries and their allies, known collectively as OPEC+, that production quotas would increase. 8 OPEC+ members agreed to raise output by 206,000 barrels per day for May. However, analysts viewed the increase as largely symbolic, as the war has already constrained shipments from several producing countries. U.S. benchmark West Texas Intermediate crude for May delivery rose 2.57% to $114.11 per barrel. International benchmark Brent crude gained approximately 2.62%, reaching $111.65 per barrel. Meanwhile, futures markets in the United States pointed lower overnight as investors continued to track developments related to the conflict and rising oil prices. Futures tied to the Dow Jones Industrial Average fell by 253 points, or about 0.5%. Futures linked to the S&P 500 declined 0.6%, while Nasdaq 100 futures dropped 0.7%. Overall, financial markets across Asia reflected cautious optimism, with gains in Japanese and South Korean equities occurring alongside heightened geopolitical uncertainty and continued volatility in global energy markets, as investors awaited further developments ahead of the newly announced deadline concerning the Strait of Hormuz.